Hey everyone, Nebraska and Gunnar here with Elevate Trading. I have partnered with PrimeXBT to bring you guys a lot of educational leverage trading content, especially risk management based, because there's just not a lot of content available for that. And I think it's really, really important. So this is part 4 in the series with PrimeXBT, and this is going to be planning trade entries. So planning trade entries with leverage trading is a little different for me than just spot trading. Also, depending on which time frame I'm looking at, I'm going to use different entry strategies, and I'm going to have to manage my position sizes accordingly to reduce my risk for different time frames. I really hope you guys enjoy this video, and let's get into it. So this is going to be my strategy, how I like to look to enter trades. All right. Everyone's strategy is going to be different. Take bits and pieces of this as you like. But basically, I like to short resistance and I like to long support. All right. That's the gist of this. So I really like to start by zooming out to a higher time frame. I like to trade the lower time frames with leverage because I can use tight stop losses, etc. But as far as entering a trade, I like to zoom out. I like to look at the bigger picture and I like to see where things are at. So just looking at today's daily candle, now we've already had a little bit of price action play out, but that's okay. And if you were following me on Twitter, you saw my posts that were following along with this really well. So what I like to do is I like to map out a resistance zone, right? And I like to map out a support zone. And you can see here now I have a support and a resistance area. So if I'm looking for a trade, I'm going to look for a long down here and for a short down here. Now, depends on what time frame I'm going to trade this on. So for this one, it's going to be all low time frame entries for me, all right, because that's just easier. We'll talk a little bit about higher time frame entries, but mostly I'm just going to talk about low time frames since that's how I trade leverage. So what I'm going to do is I can zoom in now to the 4H chart. If this is a 4-hour chart, correct, I'm going to want to enter at this resistance on the 4-hour. It rejects, so I can feel confident about that. And for me, it's also a little bit of a higher volume rejection. Now I can look for an entry, all right? And my entry might just be after this closes here. So after this 4-hour closes, all right, I can look for a rebound bounce up to another resistance zone on a lower time frame, and then I can use a stop loss. So how this trade would look for me is I would take my short position here, and I'm one of those people who once this candle starts going down here, I see low time frame momentum dropping, I'm probably going to get in once I see this rejection. All right, so let's just say my entry is somewhere up here. All right, I'm going to put my stop loss above invalidation, which for me would be the top of this wick. So it's a 1.42% risk. And then I'm going to look for my support zone down here at about 47,700-ish, give or take. And that's a 4% risk. All right, so now I'm planning out a trade. Before you enter a trade, you should plan it out. All right, I see I have a 1.4% risk and I have a 4% reward. Now, if I'm using no leverage, all right, I could technically go all in with my account here on a 1x leverage short, all right, with a 1.42% risk. I like my risk on my trades to be 1 to 2% of my account on leverage trading. I could do and remember, this is a 4-hour time frame, so my stop losses are going to be wider, so I can't use as much leverage or as large position sizes. All right, so for you guys that don't know how to calculate your positions, first off, you should learn that, but also if you have a $10,000 account, then you could do a $1,000 position at 10x leverage, which would give you a $142 risk. I entered, and you can see that we actually tapped it up here, which is actually a really good confirmation for me to say that we're going to go lower after this rejects. And then by the time this rejects and I see this big wick here, I can now put my stop loss probably up to break even to reduce my risk completely on this entry. If I was looking down here for longs, now I could say, all right, let me wait for this 4-hour to close, which it still has about 2 hours left. So I would need more time for this to develop. However, if I was looking at lower time frames, I could actually look for a long in this area. So let me go to my 30-minute time frame now. All right. And you can see here now we have this very, very bearish candle here, obviously, right? Very big sell off. But you see this candle here, we get a nice wick low into support and we start bouncing up. So for me, I probably would have taken, and again, I would have gone to lower time frames, but I probably would have taken an entry up here somewhere once I saw this starting to hold. And then my confirmation would be closing above this resistance here. So let's go even a little bit lower. We'll go to a 5-minute chart. All right. And now I get this nice hammer candle, and this is probably where I would enter. So I'm on a 5-minute chart now. So I'm going to take this here and I get this nice hold. So I'd probably enter somewhere around here when this candle's green. For me, my risk reward, I always need it to be at least 2 to 1, but I actually really like 3 to 1 or 4 to 1. And what I mean by that is this risk is at least half as much as this reward. And my reward would probably be this resistance area here. And I usually draw zones and I'll start to ladder out in my zone just in case it doesn't always reach my target. All right, so we're just going to say right about this resistance area is going to be my target. So a 0.23 risk, 0.93 target. Now, you see how much of a difference this is. My last risk reward on a 4-hour chart was 1.4%, and my target was going to be a wider percentage. Now, on a 5-minute chart, my risk is 0.23%. So I can actually use a larger position with tighter risk and still have that 1% risk management. Now, what you don't want to see is you don't want to enter up here and have your risk down here and your reward right here. All right, see how that's skewed? You have to basically win more trades than you lose for this type of trade, and that's just not ideal. All right, and I'll talk more in future videos about stop losses, but stop losses basically go below invalidations. There's different strategies. You can use manual stop losses to avoid these type of wicks. There's a lot of different strategies for that, so I won't go too in depth on that. All right, now I like to use diagonals, okay? And so if I'm using diagonals, I can actually take this diagonal trend line and I can see I have a breakdown on high volume. That's kind of my key to take an entry. And I'm going to look for an entry on the retest. I would look something like this. I would put my stop loss above my EMAs and my target would be probably this support area or maybe down a little bit lower to my higher time frame support area. If I wait for this retest to reject, take an entry. Now it's 0.54% to 1.88%. Again, that's a 3 to 1, almost a 4 to 1 risk to reward. The key here, you guys, is to use consistent position sizes or consistent risk on your account. You don't even have to have over a 50% win rate for a lot of these to make profit. My win rate seems to be about 60%. On a bad day, it's usually 45 to 50%. On a good day, it's around 70 to 75%. Rarely is my win percentage ever above 75%, especially over time. It's pretty much around 60 to 65% over a long stretch of time. Now, the key here is to make sure that my losses are consistent because you never know when you're going to take a loss, and you can feel very, very confident about a trade and get stopped out on it. If you go very, very big on a trade because you're very confident in it and you're wrong, and that ends up wiping out a lot of your profits, then you're going to have a hard time sustaining profit in the long run. And what I mean by that is if you're risking, let's say you're risking $200 per trade, just every trade you enter, you're risking $200. You were just on a hot streak. You won 6 trades in a row. You were risking $200 each trade. You won those 6 trades in a row. You're in a big hot streak. Your account's up and you're like, oh man, this next one, I should have gone bigger on all those because this next one, I could be in so much more profit right now. So this next one, I got to go bigger because I want to make more money and I've been killing it. Okay. Well, this next one you risk $600 and you lose. Maybe you risk the 600 again and you lose. Now you're down 1,200. Now you go double up because you're like, okay, I got this one. I don't lose that many trades in a row, yada, yada. And you double down and you risk 1,200 this trade and you lose. All right, so you had a 6-trade win streak, a 3-trade losing streak, and that 3-trade losing streak just undid all your profits and you actually ended up losing money. That is the one sin you have to avoid when leverage trading because it's very easy to blow up your account that way. All right, and by doing that, it's just keeping consistent risk management and planning out entries and calculating them and not FOMOing into anything. All right, this is a 30-minute chart. You can see here, this is a whole 30 minutes and this is a whole 30 minutes. And we tap this twice and we even come back up and hit here. So I have an hour. Price is in this range for like 2 hours. All right, so I have 2 hours to plan this out, calculate this out. I don't have to FOMO into anything. If you're feeling like FOMOing into a position, it's not always a bad thing to just take a very small position to get in it if you really feel like you need to be in it. Very small position, very low risk, like 25% the size that you would normally use or less. Let's say I pull up the chart here and price is right here. And I'm like, oh shoot, I need to get in this, but I don't have time to calculate this. I don't have time to plan a trade entry. You just go 25% of your normal position size. And basically at that point, it's low risk and you can just throw anything, any reasonable stop loss here. Because again, it's low risk with fees, all that jazz. And then you can start to assess. And then if it drops while you're trading, you don't have FOMO in. You're not going to say, oh God, I got to FOMO in now because this dropped quick. So you're not FOMOing in late. You're not feeling like you missed out. You're at least catching a little bit of profit. Sure, you didn't maximize it, but you didn't have time to get there. It's okay. There's other trades to be had, but that's how you can kind of curb that FOMO and curb those shitty entries. All right. Those poor trade entries by just going very small until you really have a good calculation. And then you can get the other 75% in, right? Now, another thing with planning entries, right? I waited for a breakdown and a retest because it's a diagonal and this is a bullish breakout. Nice high volume. Everyone definitely thinks we're going higher. I would probably think we're going higher too, unless I saw maybe some on balance volume bearish divergence, which you can actually see here. I do have bearish divergence. All right. So you can use bearish and bullish divergences to help you trade as well. I personally use Top Goon X, and you can see here my momentum was dropping. I have this actually white marker here, which usually tells me I've got a bear div with a white marker. This bearish divergence is basically telling me that we've got some bearish divergence, obviously. And then this white marker is usually telling me, okay, yeah, this is a real rejection. And that's usually when I look to short, just based off that in general. But then obviously my momentum was dropping, which was a good sign as well. And we have this bearish divergence on OBV. And so a lot of this too is just being patient and waiting for entries to actually happen. A lot of what we do as an analyst is we say, okay, if this breaks out, I'm going to get the retest and then I'm going to target, maybe this resistance up here. But in the picture, we say, okay, this is a long breakout. Oh crap, we're going higher, we're higher. Oh God, I got to FOMO in. One, you FOMO in, or two, you start buying way too early here. And then your stop loss has to be too wide and you go too big and you take a big loss. So really need to plan your entries, you guys, and understand the longer you do this, the more you'll understand that there's always another trade. All right. This is not a high confirmation trade. This is a high confirmation trade because I have a volume breakdown, all right, and I have a retest rejection. That's good confirmation. There's not really much confirmation, so there's no need for me to force this trade. And then a lot of people see this break down and we start to buy back up. And if they close their long, then we go back up and they start to get back in. All right. And that's how you get chopped up in fees. That's how you get chopped up leverage trading and you start going bigger to make back your losses. So you really need to calculate everything out, you guys. Be patient. Wait for your entries to happen. Zoom out. Understand what's going on your higher time frames. All right. Where's your supports? Where's your resistance at? So I just want to make a reminder, you guys, right? Use this tool to calculate your positions. It's super helpful. And just know that your trades on higher time frames are going to have to be smaller positions because I'm on a 6-hour chart now. Look how wide of a range I have. If I try to do an entry on a 6-hour chart with a 0.25% risk, I'm not going to hit that. Not only that, but a 0.25% risk with a 7% reward is almost impossible to hit. All right. There's just too many stop hunts that happen, too many wicks, et cetera, et cetera. All right. So don't try to be a hero. Don't try to call the bottom or the top. Wait for your confirmations. Calculate out your position. Once you calculate it out, you're not going to feel like you need to babysit it. You're not going to feel like you have to, panic sell if you get a little wick up and it's, your position's negative. And you also should understand that when you enter a position, especially on a higher time frame, you're likely going to be negative on your position at some point. So remember, a 1-minute chart, less movement. 6-hour chart, 1-day chart, those are going to be the ones you're going to hold a little bit longer. You're going to have to use a little bit smaller positions, a little bit wider stop loss. Okay. Thank you guys for checking out my video. I really hope you found it helpful. Please retweet on Twitter. Those really help me getting views on these as I try to grow my YouTube and get more video content out to you guys. And stay tuned for part 5 of the series. Also, if you want to try out PrimeXBT, there's a link below. Also, if you put in the code after sign up, Gooner, you can get 50% deposit bonus. If you have that deposit bonus in your account, you can't technically withdraw it. And if you have funds in your trading account and you try to move them to your wallet, it will say, oh, I'm sorry, you can't remove these funds because it will delete your trading bonus and whatever. If you pull out those funds anyway, you can withdraw them or whatever you want to do. And then when you put them back into your trading account, it will actually give you the 50% bonus again. Shh, don't tell anyone. But yeah, please subscribe to my YouTube, retweet this on Twitter, and stay tuned for more video. Thanks for watching.